income protection and accident, sickness and unemployment cover, an introduction. But firstly, my name's Dan and I'm a CeMAP qualified mortgage and protection advisor. This video is purely for educational purposes only and should not be seen as advice or a recommendation to act. Grab a drink, sit back and relax. I'll hopefully cover off all of the basics of the differences between income protection and accident, sickness and unemployment, also known as ASU. I'll put a link in the description below to a helpful website that will cover off these points in finer detail. If you're unable to work, both income protection and ASU will provide you with income, but choosing the right one is so important to protect your household finances. Let me go through the differences to help you decide. So, what is income protection insurance? Income protection gives you cover for the longer term. If you're unable to work for health reasons, similar to ASU, income replacement policies are based on your current earnings, up to the maximum of around 65%. But they don't usually cover your redundancy. Okay. The major difference is that some income protection policies can pay you indefinitely until you can return to your job, find another job, or even until you retire. Some policies only pay out if you can't perform any work, rather than simply being unable to remain in your existing role. More comprehensive policies protect your existing job, but they will also cost more. Income protection tends to include detailed personal questions and a medical. This type of cover is also significantly more expensive than ASU, which is designed more for the shorter term. Okay then, so what's accident, sickness and unemployment cover, or ASU as you call it? Accident, sickness and unemployment insurance, ASU, pays out if you lose your job or become unable to work through illness, injury or redundancy. It's often referred to as short-term income protection insurance or payment protection insurance, as payouts are restricted, so you can only claim for a maximum of 12 to 24 months. The level of cover is based on your mortgage and monthly outgoings, and although you get to choose the amount, payouts will usually be limited to 60–65% of your income. Okay. You will pay a monthly premium for the cover, which rolls over month by month until you cancel the policy or make a claim. This makes ASU insurance relatively easy to take out. Right, so what sick pay are you entitled to? Some employers have a sick pay scheme already built into their employment contracts, also known as a group sickness policy. Even if they don't, employers are required by law to give you statutory sick pay, also known as SSP, provided you're classed as an employee, including agency workers, you have been ill at least 4 days in a row, you earn at least £116 per week before tax, you tell your employer you're sick within the appropriate time frame, and if you meet this criteria, you can start claiming statutory sick pay for up to 28 weeks. At the time of recording, you receive £95.85 a week. I'll put a link below to the government website. You will only get statutory sick pay for the days that you would normally have worked, and it is subject to tax and national insurance. Different rules apply for agricultural sick pay and different rules again apply within Scotland. So again, I'll put a link in the description below. So do I need income protection or accident, sickness and unemployment cover? If you need more financial help than statutory sick pay and or your company scheme can provide, it does make sense to protect yourself with one of these policies, but make sure you check with your employer before applying to see what you're already covered for. The major difference between these types of policies is why they pay out and how. So you'll need to think carefully about your circumstances, what you'll want to be covered for, how much it's worth you spending on the premiums. Both types of policies require a deferred period before they'll pay out, although some policies will backdate their payout to the start of your claim. Right. If you don't have many outgoings or significant liabilities, ASU should help you stay on your feet by covering your debts and the bills until you get back to work. However, income protection will give you a stronger safety net. I appreciate this is a lot of information to take in. I have left my contact details in the description, so if you have any questions, alternatively, put them in the comments below. If you want to see a video on how parents can help you get on the property ladder, please watch this video. And if you want to see a video on the differences between Help to Buy versus shared ownership, please watch this video. If you want to see more content like this, please make sure you subscribe, and I'll see you next week.